Hello traders, welcome back to my YouTube channel. My name is Norman Trader, and in today's episode we are going to talk about market structure. In our previous episode we talked about market structure, and even today we are going to analyze more about market structure so that we can have a deep understanding of market structure. For new viewers, please kindly subscribe, like and share. For returning subscribers, please, we thank you for your kind support. So in this chart here, you can see on this market, previously the market was in a downtrend. You can see after this point here, this was our swing low, and this is our swing high. So this is what we call trading on a range. This is a range. We can trade our market using this range here. This is our swing high, this is our swing low. So this was a change of character, and you can see here we have a very good demand zone which created an imbalance and this change of character. And after this swing high here, the market retested our demand zone, and after retesting our demand zone, you can see the market continued moving in an uptrend. Okay, most of us tend to trade on these order blocks, but for me, order blocks which I prefer most trading with are order blocks which have imbalances, which are before imbalances, and this is what I call point of interest. I have one video which I've created which talks more about point of interest. You can see the market always reacting to these zones here. For this scenario here, you can see there was not much imbalance because the market was, as it was trading, it was filling up all the imbalances. And after breaking of this swing high here, after all this sweep of liquidity, the market left this order block here. Order blocks which are valid and which market respects most are the ones which are below or above imbalance. By this I mean an order block which is immediate to an imbalance, like this one here. And you can see after the market reached to this level, there was a small pullback here, and this was a swing high. This candle represents sweep of liquidity, and you can see the market after sweeping liquidity of this high here and failing to continue further, there was change of character here. With that change of character, there is one zone here which I remember where I took this trade, and there was I was in a little bit worried because this trade, you can see there is this order block here. This zone here, and I took it as a flip zone, and I had taken some trade here, but I just corrected a few pips because after I took the trade here, my stop loss was, I pushed my stop loss to break even, so I didn't incur so much losses there. You can see after the change of character, the market reacted to this order block, the market reacted to this order block, and on this order block there was absolute break of this order block. That is why I was saying that some of these order blocks we draw as traders, it doesn't matter a lot because they mean less to our charts. Some of the people, they just draw order blocks because it's a swing high, this is an order block, and they don't care how the market reacts there, but some of them are all orders have been filled. You can see this order block here was filled up because you can see some of the imbalances which were left here, and this flip zone also we had some small imbalances which were left there, so the market had to come back and correct those imbalances. And after tapping that area, you can see the reaction which was there. So this being our previous trading range, you can see it was broken at this level because we were trading on this range. okay, with a series of break of structure, and this was a inducement which market rectified to come and correct the orders here on the supply zone, and the market continues moving down. So currently gold is at 1918 here as on today, October 16, and you can see all the order blocks which were underlaying here when gold pushed down to the higher time frame demand zone here. You can see there was a lot of order blocks which the market didn't obey here. This one was just a little bit obeyed, but you can see the other small order blocks, the market never obeyed them, because on Friday we had some news, and all this push was due to some news. So on this order block here, the market has also broken this supply zone here, and I'm also expecting, the market seems bearish, but I still expect that this zone needs to be tapped, and maybe probably to sweep some liquidity, because we have we have some liquidity here on top here. So I expect maybe probably the market would sweep this liquidity above this supply zone, because you can see this supply zone has been tapped twice before. So there means there is a lot of sellers on this zone, and a lot of stop losses and orders placed above here. So for the smart money, the big boys, I believe most probably they are going to sweep some stop loss of retail traders on this zone here. So gold most probably, as we talk today, since this is a live chart, probably it will retest this order block here. You can see the market, how last week it has been aggressive to our analysis. The last 2 days of last week, on Thursday and Friday, the market has been somehow aggressive to our analysis. So on this week, probably I'm expecting gold to tap this zone here, or to have a retracement up to this order block. So guys, that's it for today. I just wanted us to understand how we trade on a range, and on this scenario here, you can see this is our range here. This is our range, that's our swing high, and this is our swing low here. So we are still trading on that range between this swing high and this swing low here. So if the market breaks this area here, that is a continuous uptrend targeting other higher time frame supply zones. So currently this is our trading range between this swing high and this swing low. And for now, if you are a day trader, you are trading ranges between this swing low and this swing high. Probably if the market breaks here, it's forming a break of structure, you can just target this higher time frame supply zone. Okay, that's for today guys. We are going to continue analyzing market structure. For this gold USD, let's wait and see. I can see some more bearish, but today is on Monday, so I expect less, because on Monday there is no much activity going on. So by tomorrow, on Tuesday, October 17th, let's wait and see if gold will tap this order block here, or if more so there was a gap which was left here by last week opening on Monday, so maybe the gap might be filled up. Thank you guys for your support. Thank you for watching my video. Please, you're always welcome to my channel. For those who are new, please kindly subscribe, like and share. Thank you.